Hey guys, this is Bruce Marshall with Simpler Trading doing the nightly market update for Wednesday, March the 22nd. And today is, of course, Fed Day. You can see here I've got the charts up and the market went bonkers after the Fed meeting. And lots going on right now. And we'll jump right in and start talking about these charts. I have got this is the NASDAQ, this is the ES or the S&P 500, this is the Russell 2000, and then this is a tick chart that I've got up right here. And so let me move these out of the way and we'll focus on the S&P. And we started out the light gray area. Here's the overnight session. The ES trades overnight. And then here's the opening bell today. Ding, 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 opening bell. And you can see here on the ES, we're just kind of chopping along. Everyone's waiting on that Fed decision, which was right there. And I was actually doing a room session in our main trading room when that announcement happened. And the Fed raised rates 25 basis points. So that's a quarter of a point, 0.25 basis points. So that's a quarter of 1%, and the range that was expected was anywhere from actually 0 to 25 basis points to 50 basis points. And I was thinking we would get 50 early on, maybe in the last couple of weeks before the banking crisis kind of kicked in. Once that banking crisis happened, it was Silicon Valley and the banks out in California. That put the Fed in a really in a predicament whether to raise rates or even not raise rates at all. And the Fed has been saying, you know, we're going to keep raising rates and get this under control and all that kind of stuff. And then all of a sudden, you know, the banking crisis happened, and it was like, whoa, wait a minute, we need to be really careful. If this banking situation gets worse, it's gonna hurt the economy and all that kind of stuff, and we may throw gas on the fire by raising 50 basis points. That might be too much at this point in time. And also, if we don't do anything, it'll show that we're deeply concerned about this, and it might perceive more risk in the economy and all that kind of stuff. So they're really kind of, you know, in a bind, in a bad spot, trying to figure out what to do. So they split the difference and did 25 basis points. Now we all assumed that we were going to get 25 basis points going into this over the last couple of days, and that's what we got. But the main thing is what the Fed says, you know, at a meeting afterwards. And you know, they had been saying that they're going to keep raising rates until they get under control and all that kind of stuff, and now they're saying probably only one more cut this year, which is good. And I would have thought that we would have gotten a lot more of a bullish impact from this. Now we did get, you know, as soon as this happened, we did get, you know, straight up, straight down, straight up, straight down, the same kind of normal stuff. But then the Fed, you know, Powell keeps talking, and he says that credit is tightening because of the banking issues, and also interest rates, you know, rising are it's slowing down the economy and all that kind of stuff. And it kind of put a negative spin, the way that I interpret it, that it put a negative spin on the economy, because credit tightening is the same thing as hiking rates. It does the same thing basically. You know, to how it impacts the you know, the consumer, I guess, in the grand picture, right? And I think the market was also anticipating maybe even some rate cuts later in the year. It raise, and then at some point the economy starts slowing down. They have to turn and start cutting. And Powell said that's not. I don't know how he said it. That's not going to happen this year. I don't think. Market didn't like that. So we had a really pretty ugly sell-off here right in the end of the day, again, which I did not think that. I didn't think we'd get this much downside. In fact, I thought we probably would get a little more upside. You know, in the market, the S&P ended up down 65, 66 points on the day. So you know, that's a little, I guess, discouraging. The the Fed was always talking about with the tightening, the credit tightening and all that kind of stuff. We're already at like 2008 levels as far as the consumer goes, and we know how that turned out, right? 2009, 2008, 2009. So, I don't know. It's we're still in limbo. I thought this would give us some clarity, and so far, it's really not. Let me move this out here, and I'll show you. Well, of course, if you have not been trading, then you've been missing all this fun stuff. And it's been, honestly, it's been. We're making a little money here. We're still making money. Actually, we've made quite a few profitable trades. But we're trading much smaller size and much tighter stops, and I'm doing a lot more scalping, essentially kind of day trading or a day or two or three kind of trading versus longer term stuff that I normally do. But it's still tradable. It's just a little more nerve wracking because it's back and forth a lot. But if we go out here to say a 1 year chart, I thought that we probably would bounce up here to our 4100 level. Now this is ES again, maybe even back up to here, and then I would actually probably short this thing back down because I think we probably do ultimately go down. But so far we're not getting this upside, and looks like we might be getting more downside. Now it's still too early to tell. We'll see how the overnight session works tonight, how the rest of the world sees this, and what happens if we get more follow through to the downside, or we get a bounce and that type of thing, and how the market reacts tomorrow in tomorrow's session. So right now we still don't have a ton of clarity. We're just waiting, waiting to kind of see which side we're going to land on tomorrow of the coin flip, I guess, and it looks like it probably would be to the downside, I suppose. But again, if you're trading this, I don't have to tell you, it's been a lot more choppy and a lot more whipsaws and things like that. But it's definitely tradable, and if you get on the right side of one of these moves, you can make a lot of money very quickly. You just have to be very nimble and be very careful. So if you are having trouble trading this, or would like to trade it a little more, or see how we're doing it, come join us at Simpler Trading. Come in the main room. We've got a lot of great traders in there. I'm in there as well. Or you can come into my specific room. I have a room called Bias where I do trading and that type thing too. So come check it out and see if we can help you. Let us know if we can help you, and don't let this market get you down. It's still a good tradable market. So with that, let me wind it up, and thanks for the time. I appreciate it, and I'll see you guys next week, same time, same place. Thanks.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me